Welcome back. Route Mobile is down 3.5% today. It's down 35% since the start of the year. And the last 1 year has been difficult. Route Mobile stock price is 53% off from its 52-week high. Gautam Badalia, the CEO of the company, is now joining in with his view on the upcoming year. Gautam, thank you very much for joining in. This is Reema here. Has Q4 panned out in line with your expectations? I remember the January conversation, or the early February, you had indicated, or you had hoped, that Q4 will be better than Q3. But that's not played out. Q4 is similar to Q3. So was it worse than your expectations? And where did the miss come, if at all?
Yeah, good morning everyone, and thanks for having me here. So if you look at, I think, the overall performance for the year, I think we have done well. In terms of demonstrating industry-leading growth rate, as you rightly said, Q4 was at par with Q3 in terms of the revenue run rate. What actually transpired was one large global technology client. Actually, they phased out one of their platform, and then they also started moving the authentication and notification messaging over different communication channels. So that was a little bit of a headwind for the quarter. But for that, I think overall from a revenue standpoint, I think we have done well. Regional businesses, I think they have done and shaped up well in terms of demonstrating growth. We have grown, the volumes by 15% on an annual basis. I think the pain has largely been around the hyperscalers and also around some of the aggregator business. So some of that, I think, because of trust deficit issues around artificially inflated traffic and all. There are some structural changes happening, and that's where I think we are now investing into the next cutting-edge technology, working on telco APIs, where we can do direct authentication at the direct network level. And then by virtue of being part of a large group within Proximus, I think we are able to now score on credibility with some of these large hyperscalers. And I think in due course, I think you will see some amount of, this pain recede meaningfully, and it should then translate into decent growth, from some of these hyperscalers.
So Gautam, very simply, at a higher level, if you could explain, what exactly is the problem with the hyperscalers? How much does it contribute to the traffic right now? What is the concern? Why are they slowing down work? At a very simple base level, for people who don't understand the technicalities of your business, if you could explain.
Sure. So what actually had transpired over the last 1.5 to 2 years has been, operators have been raising international tariffs for termination of the messages, right? And a lot of CPaaS players have been committing to the telcos, most of these hyperscalers have been looking at kind of cost optimization within their scheme of communication spend. Eventually what has transpired is some of the commitments kind of became over commitments, and then there were artificially generated traffic, which really caused a lot of concerns with some of the large players like the Amazons, Metas, and Microsofts of the world. And they started kind of introspecting into their communication spend, and they were paying for some of these fake traffic, so to say, which was not yielding them any ROI. So that led to a larger introspection. They started evaluating alternate mechanisms for sending those communication. And that was essentially the headwind that I'm talking about. And now I think most large global enterprise prefer working with partners who are directly connected to the telcos and not working with partners, where there are multiple hops.
Okay. And the concern of artificially inflated traffic, where did the buck stop? Who was responsible for that?
As I said, I think that's where I think the technology evolution will play a pivotal role. And as a part of the Proximus global umbrella, we're already kind of embarking on that or investing into that futuristic technology. The telco API, network API solution. And then I think with 365 Squared, the company that we have, they've already developed an AI-powered spam filtering solution, which is deployed with a few telcos. So we are already kind of investing into some of the stuff which can give a lot of assurance to large global enterprises, hyperscalers, in terms of their communication spend.
When you say that many large global enterprises prefer to directly work with partners, were they trying to bypass CPaaS players like you and some of the others?
The CPaaS players, but there were a lot of CPaaS players who did not have direct connectivity with the telcos. We as part of the group, we are directly connected with 450 plus mobile network operators. So we definitely have an edge Now we are not trying to invest or up the ante in terms of the technology evolution
Sure.
and drive that volume through us directly.
Okay. Now let's get back to the numbers. Do you think a 15% revenue growth is possible in FY26?
So as I think highlighted, I think earlier as well, I think we're not looking at giving any guidance considering, I mean, what's kind of transpiring globally, I mean, in terms of the tariffs, in terms of geopolitical situations. So we are not very sure about how the discretionary spend within all the enterprises kind of will evolve. But I think what we can assure to all our stakeholders is that we'll continue to demonstrate industry-leading growth rate. And at this point in time, I think what is within our control is to kind of also work on some of the cost levers. So, I mean, over the last year, because we closed a very large M&A transaction by being part of the larger group, there were a lot of integration costs, a lot of one-time incentives, and some compensation realignments. So some of those things are, I mean, in the past, we are now looking at some of the cost levers, automating some of the internal processes through AI. So, I mean, as a management team, I think we are committed to also drive some cost optimization during the year and thereby drive some stronger profitability.
So gross margins, which declined in Q4 to 19.3%, can get back to 21% by the end of next year?
Again, I will not want to kind of commit on anything forward-looking, but as you rightly said, I think what we have been able to tap into with the group in terms of synergies have been the low-cost synergy bucket, I mean, which was essentially the lowest hanging fruit. We have picked out pretty much on that, I mean, in terms of tapping that out in terms of the full potential. Now we are looking at tapping into the higher margin synergies, I think, with the group. So we believe, I think we are pretty much at the bottom of that gross margin profile, and the margin profile should meaningfully improve going forward.
Okay, we'll take that as a guidance then. Gautam, thank you very much for joining in. So the gross margin perhaps has bottomed out and will meaningfully improve from here on as the company looks to improve their cost efficiencies and tap into the synergies with the Proximus group. Route Mobile stock down 3.6%, markets down 1%, but the Nifty is holding on to 24,000 mark, even as border tensions continue to remain high and weighs on the market sentiment. It's a wrap on trading hour. Don't go anywhere. Halftime report is up next.